Today we wanted to talk about the financial discipline for future homeowners.
Right, so this is really an amazing opportunity to talk about because most people will tell us when they don't want to buy a home, they're going to say, I have to work on my credit. But that's just an excuse many times because the truth is 1 in 3 Americans have no emergency savings. This is really scary. There's $8,000 in debt, and then 1 in 3 have $0 in their bank account, which is really, really scary.
And also the government, based on the census data, most we had $8,000 debt for most of American credit card.
Yeah, it's scary numbers out there.
Yes.
And then owning a home is a financial commitment as well as a body commitment. So if something breaks in your house, how are you going to fix it? Maybe you're going to get a hammer and nails and you're going to do it yourself, but you have to have commitment to want to put that hammer and nails to the wall. It's not just about paying the mortgage, because maybe you can pay the mortgage, but you want to make sure that you have something in store for when something happens. So you want to make sure that you have a little bit of financial discipline in order to really be a successful homeowner and a successful person in life who has overcome. And I can say on a personal story, I've definitely overcome. I can tell you the books that I read coming up soon that really helped me shape from going from $0 in my bank account to understanding I needed to be financially disciplined.
Exactly. But before we deep dive in it, let's hit it.
Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you can call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
And after that, we really wanted to talk about the role of the discipline, which really you need to be practical and start taking these proactive steps as a role and discipline for the financial, which we can share with it what steps that we can take.
Well, so let me get back to the book that I was mentioning before, right? So this is the book that inspired me. It was The Richest Man in Babylon, which was found on clay stones in ancient Sumeria about the city of Babylon and how this man became the most successful person. And really it fascinated me, this book, and it's an old book from the 1930s about this even older thing. So it's a classic. And basically he tells us in that book that we have to be able to figure out how we can live on 80% of our income. So it's not about the 10% and not about living on 100% of our income. It is learning and growing having 10% into savings account all the time, 10% towards your bigger goals, your tithing, your God, and then 10% of really towards just saving. So you are never going to touch that 10% unless you have an investment, because then they can come into an investment opportunity. That's a different story. But you have savings for the investment.
And if you have the saving, you have a lot of debt. First, you need to put 20%
and he talks about in the book, he talks about how you talk to all the people that you owe money to, and you make deals over and over again. If you're like, I know I owe you this amount of money, how can I pay you off every single week to get there? And he talked about it back in ancient Babylon. So these are ancient problems that we have still that are still happening to people today. So when we look at financial discipline, it is something that we can't be ashamed of. Understand that it's a bigger picture than us, that it's a system that we didn't understand. So when we understand that there's a system out there that you didn't understand, and now you see that there's a system, what do? We told you save 10% of your money, your income, for future expenses. So future issues, if you put 10% of your money away, it will be there for you when you need it. What's the other thing?
The next thing is really avoiding unnecessary debt. Many of us, we buy things that we don't even need.
So I don't need a hang liner?
Yes, which basically brings and compound financial stress for us and our family. Another thing that we need to do.
So basically, when you've really made a goal of paying back all your debts, and you've made a goal to get all of the people off your back, understanding you don't want to put new people on your back. You want to get rid of all of that, and you don't want that again. So you want to pay those unnecessary debts off. And then don't do them again. So we have to learn from our mistakes. And then the third thing is what?
Is really monitoring your spending to ensure, as my wife said, you don't put extra person on your back and you reach your financial goal.
So I'm not getting a glider?
No glider. And now we wanted to talk about why emergency fund are critical.
Right, absolutely. So emergency funds mean that if you have 10% of your savings put away, if something happens, you lose your job, you get home repair, if something happens in your home, like the plumbing, your toilet doesn't work anymore, how are you going to get the toilet fixed? Something happens in a home repair, the roof is having an issue and you have to call the insurance, but it's going to take 2 months. The job loss or medical things, life happens. But if you have money set aside, then you don't have to rely on other people, other credit cards, loans that are going to make you suffer.
Exactly. Now, the real life story. Which real life story you wanted to talk about?
One of our clients, she was buying a house. She wanted to buy a house very badly. She had total certainty she wanted to buy a house. We were under. I told her when we walked into this house, this HVAC has a problem. Like they were working, it was working, but it didn't feel right to me. It didn't look right to me. There was an issue. She decided to go through with the purchase anyway, and then of course it failed. But at least she had a few months, the HVAC failed, but she had a few months to come up with a plan on how she was going to handle $8,000. And $8,000 was our negotiated down because I did help her try to get some quotes to get a good new system. So it should have been 10, but we got it for 8 because she understood she needed to have this before the summer came. So really by focusing on her goals of I want this house and I need to figure out this extra $8,000, she really got everything she wanted. So she understood right away that she was going to get a deal.
Exactly. And now for homeowners that we wanted to talk about emergency fund, that we really talk about it a statistical number. That emergency fund should really ideally cover between the 3 to 6 months of the living, no?
Right, so you want to make sure that you can your emergency funds put away that you're not touching will cover 6 months of your mortgage, 6 months of your utility payments, 6 months of your taxes, 6 months of your home insurance. Maybe 6 months of food as well. I would add that. So if you want to just have a buffer, so if something does happen, you lose your job, you're going to be okay.
Exactly. Therefore, now we were talking about saving a structure for homeowners, no? Right. Which really the goal is starting from building emergency fund and start with the monthly saving, no?
Right.
For your income, based on your income and expenses. And of course, we said before that we need to prioritize our expenses.
Right. So make sure, and another thing to talk about is trying to automate it as much as possible. So if you can automate 10% of your funds right away into a savings account, it can be hands-off approach. You can do it all the time. And then, of course, I wouldn't just put money away and never look at it. You do have to do what? You have to look at it.
Look at it. Exactly.
So what I have to do and adjust my plans accordingly. So if I can see that saving in this investment is worth way more than this investment, then I should focus on this investment. So you have to just pay attention to your money as well. You can't just ignore it because then that's not healthy either.
Exactly. Therefore, without emergency fund, we might face some challenges. The first things that you don't want to face it is high interest debt loans or the credit cards. No, definitely this is in the other video also we mentioned this. And the second thing is stress of the living paycheck by paycheck.
And the last is going to be you want to make sure that you don't want to have your home go onto the foreclosure market and then have someone walk away with your home for pennies on the dollar. So you want to make sure that we have financial discipline in order to achieve whatever it is that you want to go for. And by focusing on your financial discipline, you can buy this home. We can get everything that you want, but you have to make sure that we are focused on the numbers that actually make sense for you.
Exactly. And don't forget to call us, Alan Victoria, at 252-327-3357. We'd love to help you, and also subscribe in our podcast and YouTube channel. See you in the next podcast and video.